Okay, let's go. All right. Yeah, good morning. Happy Labor Day to everybody. And this webinar is going to be related to seasonality. Seasonality has been in the program for a while, but there's a new addition that I worked on in the last couple of weeks, and I just wanted to share that with everybody. So we'll go ahead and advance the slide a bit. So, of course, we always have a disclaimer. Don't you have to use your own it's your own recognizance basically for trades. Nothing that I'm saying here is a recommendation to trade any particular stock, and really this is for educational purposes only. So what is new? It's basically there's a new script. So as I was working on, what happened was the story is that I the last webinar we did, I spoke about seasonality, and last weekend I published on my blog a seasonal list of stocks that had potential for the upcoming 2 weeks. And one of the replies that I got was that it was interesting to see that those numbers, and you could see that in one of the stocks there was an 8 up years and 2 down years. But what were those 2 down years, and what were those 8 up years like? Is it possible to drill down into that? And it wasn't. And so I put together a way of doing that, which I will share with you. It did involve me writing a new script with a cryptic name called LBBD. Basically, it stands for a last bar before day. And you pass it in a month and a day, and it tells you what the last the last trading day was before that day. And you'll see how that all fits together as we go through this. Um, so before we get started, just as it's a weekend and it's a good chance to go through a quick review, following the process that I've done for the last 3 or 4 weeks. And I just wanted to sort of remind everybody of the Hindenburg omen. I did show this chart, but I've added it's now updated as of Friday. There have been no more Hindenburg omens since the last time that I presented this chart, and with the last one we had was there were two coming out of on the very right-hand side of the chart. There were two coming out of this most recent dip, but none since then. So as you can see, SPY is back up to almost all-time highs. And in fact, there's only been one close in SPY above our Friday's price. So it's really knocking on the limits at the moment. And I think, yeah, last time in the update on the blog, I mentioned the market summary, which was a list of 10 indexes that we get. These indexes are when you have that hookup with High Growth Stock Investor, which is a program you can have on your computer. And if you have that, then they contain these indexes, and we extract the data from that database, and we produce this report. And so there's been 5 days, obviously, since 5 trading days since last weekend, and they have pretty much all been green. So we were in the red area. We came out of the red into the yellow, and then finally last weekend, the last two holdouts, which were the S&P 400 and what else was it? So we were basically the S&P 400, and which is the IDX, and the IWM, which is Russell 2000. They were the two holdouts basically that stayed in yellow, and then they finally turned green on that Friday. And so that was kind of a signal that everything is looking reasonable for trades on the long side, although you could have made a lot of money if you were in long trades that climbed that wall of worry. But then as the week went on, we stayed in the green area, and then we've started to see a couple of yellows. What normally happens with these two is it's the IUXX and the NASX. And so they're both related to the NASDAQ. So the IUXX is the NASDAQ 100, and the NASX is the NASDAQ Composite. And pretty much 99% of the time, these two follow each other. So the fact that there are two indexes that are showing yellow, it's not that big a deal. And they often do show yellow, even when the rest of them are showing green. That does happen frequently. So nothing too much to worry about there, I think. And also the numbers of 0.68, that's only 2 points below what triggers it to be a green. So yeah, that's where we ended up on Friday. And then taking a look at the percent B buckets. So this is a profile essentially of all the S&P 1500 stocks, and it's basically putting them all into a into percent B levels and telling you where they sit within their percent B within their Bollinger Bands, and that's what the buckets represent. So when you have a profile like this, and you can see the majority of stocks are in the towards the upper end of the Bollinger Band, that's quite a healthy market. But you do have to be concerned when they get, because it is quite high. Okay, you've got over 60% of the stocks are now in the 0.9 Bollinger Band level, so sitting right at their upper Bollinger Band. That is quite high, and cause for concern because there could be a pause there. But then if I took a look at recent history, and so today's bar or Friday's bar is this one here, and that's the migration buckets report we just looked at. But then if you go back to the very high over here, the highest high, this was the only bar in SPY that's higher than Friday, then you can see that there were 91% of stocks above the mid band, but actually also there were 60% of stocks which were above the upper Bollinger Band. So you can get real extremes like this, and that did prove to be prescient, and the market did sell off from there. So you can't kind of sustain this for a long time. But an 88 and a 12, it's pretty high, but it's not super extreme. So and obviously we're getting to the highs. So if we break out, then there is potential for breaking out here. There's also obviously potential for rejection from the high. But then taking a sort of a step back and looking at SPY, going back, using the trend line feature, which was something I talked about in the last webinar that I did. I've now put two trend lines on, a longer term trend line and a shorter term trend line. So you can see in the longer term, you actually have room here on the upside as you get to these, draw a line to the highs here. So 594, 595 currently would not be out of the question, in the next few months. But also look at the lower trend line, because that also is, these essentially are, I think, the limits that you can look at for where SPY might go. And then you have the shorter term trend lines, which are congested at the moment. And then last week was quite a low volatility week because of, I think, a lot of people are on vacation, summer vacation, but everyone gets back after Labor Day. So I think that to expect more volatility coming up from tomorrow onwards, basically. So yeah, it's an interesting point that we're at. We're at the highs. There could be a big push to push out to above this level. But with the volatility that's bound to come in next week, you could see moves back down here too. So that is my synopsis of the market. I did write a blog post, and I posted that information to the email list. If you're on my email list, you would have got a message that I posted this information, and I might do this on a regular basis, like a weekly just summary of what's gone on in the market using EdgeRater reports to get some insights. So this was last weekend's post. I talked about what's in there just now. And then one of the thing at the very end of this post was a seasonality report, the seasonality report that you can generate in EdgeRater today. And essentially, there was a list of about 20 stocks. And I said in this blog post last weekend, these were the stocks to watch. No, not to watch, the stocks that I would be watching because they have upcoming seasonality and paying attention to some other factors too. So here's a more close-up view of that report, and there are two stocks that I just wanted to talk about. PBR, which was third in the list, which had over the last 10 years eight up years and 2 down years with a 5% average, and then Starbucks, which had a 8 and 2 with a 3%. Okay, let's just take a look at the charts of PBR. So this is Friday in PBR on the left-hand side, and this was Monday. So there was a huge move in PBR on Monday, and you can tell by the indicator below, which is the straddle percent gain. If you had an at the money straddle for the next expiration option on the Monday, that gained 422%. Huge. And then we'll take a look at Starbucks. And so Starbucks, this was Starbucks on the last weekend on the Friday. See the longer term trend lines trending up. It's in some consolidation area here. And then on Monday, the bar pushed a bit higher to create these shorter term trend lines. They now came into effect. And then on the Tuesday, Starbucks pushed out of that into this bar here. So that list of seasonality was a good list to be watching, to pay attention to the stocks, to see, these are stocks that could have been traded intraday. They had great intraday moves. And if you're an intraday trader, this would have been a great list of stocks to watch, and could have made a lot of money with these trades. So thanks for attending. That's it. No. So now let's get on to the seasonality and talk about seasonality. So I did show the report from last weekend, and that's all been in the program for a while, probably over 10 years. And it's a seasonality now is called. So it's called seasonality now. I'll explain exactly what it does now, because I have changed it just a fraction in the last couple of weeks. And there are reasons for that. But so with the seasonality in EdgeRater, it's talking about calendar day seasonality, not trading day seasonality, but actual calendar days. So what happens is, if you run this on a day like today, the last bar in this data is 8:30, which is Friday. So the program says, go back 10 years and tell me what the percent gain was over a 2-week period from 8:31 to 2 weeks after 8:31, basically. That's what it does. And then it's also got the 1 month column, 2 months, etc. But basically it's a calendar period. And so obviously as you go back through those years, 10 years of data, some of those days within that period are going to be holidays. Some are going to be, because it's a Labor Day, essentially. Labor Day will always fall in that time. Some of them are going to be weekends, but they're going to be shifted. They're not all going to be on the same day. So each year we just take the calendar days, and that's how we work it. And then it used to be in this report that it would be we would take the opening price of the trading day after the 30th, the first trading day after the 30th, which, because Labor Day is always there, it's going to be around the 2nd or 3rd of September, and it would be the opening price of that to the closing price of 2 weeks later. Now that's been changed in here, and so it's always going to take the last bar before the 30th, the closing price. That's your kind of base price, and then it's still going to use the close price 2 weeks later to figure out the percentage move. So that's a change that's been made. So it's a small change. But you may notice some of the numbers are a little different if you run this report today compared to last weekend. Okay. So so that's what it's showing. It's a very quick and dirty way of getting seasonality for a massive list of stocks, and very easy to sort and filter to narrow it down to stocks that have potential to move in the upcoming 2 week period or 1 month period. And it one way that's good to sort this list is to look at the number of up years and just filter it by um, you can say I only want to look at stocks where out of the last 10 years, 8 or 7 of them have been up years. So we've immediately narrowed down that list of 250 to a list of around, maybe that's 20 in there. Okay, and then we can sort them by average percent gain. And then we can take a look at the charts on those. So you've got this Golar NNG. And this chart, I've configured this with my trend lines, the trend lines that were added into EdgeRater. So yeah, so Golar 7 and 3, 5% over the next 2 weeks. Pan W, which had interesting move. It had an interesting move because this appeared last time as well, last weekend as well. So I was watching this quite closely in the week, and it had a massive move on Thursday to a high and sold off, and then on Friday had another fairly large move. So this is another one to watch for next week, I think. And then these are the others that meet that criteria. So that's something that we could always do in the program. And the now part of this seasonality is referring to we're taking today's date and we're saying what might be good going forward from today. There are a couple of other seasonality reports in the program, which are all in the seasonal analysis category. And there's seasonality by month. So rather than taking today and projecting forward 2 weeks or 1 month or 2 months, it's just going every month. And so if you run this, it's basically going to give you the January performance, February performance over the last 10 years of these stocks. So a really quick way to see what stocks perform well in which months. And it always used to be that Netflix was a great performer at a certain time of year, just after Christmas, because everyone's signing up for Netflix at Christmas, and they had good results in the first report they did of the following year. And that doesn't hold anymore, but it always used to be that Netflix was had great seasonality, and the trade for Netflix earnings in the first earnings of the year was always good on the positive side. That's changed since then, but that's the kind of thing that you can find with this program. You can do your sorting and filtering on here and find the next Netflix seasonality stock essentially. And then there's a couple of others. Seasonality 2 months, 3 months, or 4 months, which basically take a 2 month period, 3 month period, and a 4 month period. So it would be like January to February, what's been good in that period, February to March, March to April, etc. And you get similar reports. So these are really quick and easy reports to run, and it gives you a good sense of what is coming up in seasonality. So the new addition is how can we see what the actual trades are for each of those years? And that's something that somebody actually wanted to do. And then I was trying to figure out a way to easily do that. And it turned out it wasn't that hard, actually. It just involved writing a script to fire an event on a certain month and a day of a year, or the last trading bar before that month and day for every single year. So I wrote that in EdgeRater chart script, and then I realized that became very complex because there were lots of kind of conditions that you have to look out for. And so then I just put it into the program itself as a method that you can call from your script. So that makes it a lot easier. So let me give you an example of what I'm talking about here. So if I go to my chart scripts, you'll find under system scans a new script called creative name of LBBD, last bar before date. And if I pop that down onto the chart area, and I make this chart a bit zoom it out, okay, you can see every year there is an event happens, and this is happening on 10/1 every single year. Well, that we'd have to zoom in to find out the exact date of those. Okay, so this particular event down here happened on 9/30 in 2021. In 2022, it also happened on 9/30. In 2020, it also happened on 9/30. And in 2019, it happened on 9/30. So the parameters here are 10/1. So I'm saying, what was the last trading bar before October the 1st? And for the last 4 years, it's been September the 30th. And for anybody who knows about the backtesting capabilities and trade simulation capabilities in EdgeRater, you will know that once you've got that event coming up, you can run trade simulations around it. And so that's basically how this has been programmed to work. So what you could do, very simple thing, is to say, so say you found something that was interesting and you wanted to dive into more detail. We'll go back to maybe seasonality, the Seasonality Now report, and we'll look at PAN-W, Palo Alto Networks. Okay, 4%, 8, and 2. Let's find out more details about PAN-W. Right, well, one thing you can do is you can go to the entries and exits, and we can just work with PAN-W. So I'll select that on the left-hand side. I'll go to my scan. It'll be last bar before date. I'll say, what's today's date? Today's date is 9/2. So I'll say 9/2 on there, and just run that entry, and it's given me all the days where it's the last bar before 9/2. So these are all events that can now be used in a trade simulation. Okay, we should have 10 of them. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then we also have this year's one, but because we don't have enough data going forward, we're not going to include that in the seasonality. That will automatically be dropped. We can go to the exits, and we can also add LBBD for the exits. And we can then just say, what is 2 weeks? What kind of period are we looking for? 2 weeks in that case, right? The 8 and 2 was a 2-week period. So then you have to figure out what is 2 weeks from 9/2. And we know that if you look at a calendar, that would be 9/16. So I can use that as my scan here. And so we have a list of exits. And all you do then in EdgeRater is you go to trade simulation, you say, I'm going to trade long on the close of the last bar before 9/2, and I'm going to hold until the exit event hits, which is the last bar before 9/16, and that's it essentially. I'll run that. Here we have 11 trades because the last trade was 2024. We can remove that by saying, well, it was a last bar exit, so we won't exit on last bar. So then we have the 10 trades, and they are the 10 trades that make up the history there. Okay, so that's one thing you can do to do it, and that's where the genesis of this idea came from. So the idea was you can you've got your summary we've always had, and then you can create an event, and you can create trade simulation, and that's a very manual process. So it's something you have to do in the entries and exits tab. You have to do that then run the trade simulation. So it's a few steps in order to get that information. So EdgeRater is very good at doing things with templates. And so then the idea was what we'll do is we'll instead of manually putting that into entries and exits, what we'll do is just include a configuration for the template for trade simulation. So we have various configuration files for trade simulation. I just added one for seasonality. I'll show you how that works. So trade simulation batch. Again, I'll just run it for pattern W rather than all these. It doesn't take long to run for all of them, but I just want to be very specific here. Okay. So in the trade simulation batch template, all you have to do now is choose the new sim seasonality now configuration. When you click on this file button, it will actually open up the folder that contains all of the trade simulation configurations. And the very latest one to be added was this simulate seasonality now. So just select that. And one thing that is important to remember here, because this is not specific to seasonality, this trade simulation batch template. This is for running any sort of trade simulation in a batch mode. So what we do here is to say, don't override the dates. Don't worry too much about that, but just say no for that and then hit run. And what will happen is you will get this template is configured to run several simulations based on number of days held. So we've got September 2nd to 7th, September 2nd to 8th, 9th, 10th, all the way through to 16th. Okay, let's run that for all of the years, all of those 10 years. And it's come up with basically our report. You can see the number of trades here is 10 for each of these years because there's 10 years of data. So in each year, it's making one trade. And then it's also telling us the average percent gain. The average percent gain is the number that appears in the summary that we've always had, the one I showed at the very beginning. When you say 8, 2, and 4%, that 4% is the average of all of those years put together. So in this report, you're actually going to see a summary of that too. So it's basically showing the similar information to this information. This is showing very similar information to this, except it's running through various periods of time, not just 2 weeks, but it's running through from September 2nd and then running through several days beyond that. So then the question is, how do you see the actual individual trades? And that's the key here is when you run a batch simulation in EdgeRater, all you need to do to see the actual individual trades is to click on the row you're interested in and press open link document. And these are now the actual trades that were used in the calculation. And so if I click on that, I come over here, I'll remove that trend line. Okay, so we'll keep that going, set my chart layout the way I want it. We'll look at year 2. I can zoom that out. I can't zoom out year 1 because that's where the data started. So that's year 2. So as I scroll through these, every single year, I can see what the actual stock was doing in that time. We can see that if it's green, when it's green, it means it was an up year. So you can see that there were 8 up years and 2 down years here. You can see in year 1, there was a massive move of 18%. And you can also see, using this chart, that earnings occurred in the middle of that period. And that didn't happen every single year, but it happened a lot of time. So it happened in year 2, which was 2015. There was an earnings date came up. In 2016, earnings had already happened, but you still had an up year. In 2017, you had a down year just after earnings. In 2018, it was over earnings. You had an up year. In 2019, again, it was over earnings. You had an up year. In 2020, earnings had already happened, uh, sold off. I think a lot of things were selling off in 2020, a down year, and then 21 up year, not over earnings. 22 up year, not over earnings, and 23 last year, an up year, not over earnings. So we've drilled down into those trades that make up that number for the average percent gain and the 8 and the 2. So yeah, so it's really using existing functionality capabilities of EdgeRater to allow us to see those individual trades. But it's very easy to do. And I know a lot of people are not doing trade simulation side of the program, but this is all canned, so you don't have to go into all the details of the trade simulation. You pick the configuration file, which is sim seasonality now, and then you run it against your list of stocks. Now, I've only chosen one stock here, Pan W, because that's all I'm interested in. But I could have chosen all of the stocks in the list, and that's going to generate a slightly different view of things. So I want to talk about that. Just see if there are any questions so far. Okay, so yeah, weekly table, that's a good, I mean, I have been thinking about that, and it's probably coming, Michael. Um, yeah, Michael, yeah, got that. Yep, I hear you. Yeah, so the thing is, you will have noticed in the program under seasonality, we have basically the seasonality now and then month for various extensions of months, 2, 3, and 4. But we also should do weeks, so you should have 1 to 52 weeks of the year and what the stats are for seasonality in that time period. That is coming for sure. Um, okay, so let's go back to here's a question from Brock about CRM for September 4. So I'm looking at the 830. Okay, 830 projecting out 2 weeks. And if I turn off my filter here and I do a search for CRM in here, we'll see what happens. Here it is. Yeah, so CRM is projected. It's had 4 up years in the last 10 and 6 down years and a negative 2% average for the next 2 weeks. Looks like it's just had earnings and it is trading lower since earnings. So that's CRM. Also note that the trend lines in CRM are starting to turn down. So if we go back in time before earnings on CRM, I'll go to here and zoom in a little bit. Okay, so we had a flat upper trend line in CRM coming into earnings and a rising lower trend line. That was Tuesday, the 27th of August. On the 28th, the lower trend line had started to decline. It had gone from this upward trending trend line to now a downward trending trend line. And the upper trend line stayed flat. Came into earnings, and then the day after earnings was a wide-ranging day, up and down. But it closed at the lower trend line, and then the trend line sloped down even further. So that's that's what happened with CRM. But these trend lines are really great because they really you can see when they start getting nudged in one direction or another. It's a lot easier to see what's happening than using something like a moving average. So I really like to use the replay mode on that and go and look at those. Yeah, welcome. Mauricio, differences or advantages with some similar best choice or seasonality trader. See, I do know that I yeah, I don't know. I never owned best choice software. I know a lot of people that do have it, who could talk to that a bit better. And Seasonality Trader, which was, I believe that was a spin-off from the developer. Yeah, and I never owned that, so I don't know all the details of that. So I'm really the wrong person to ask about the advantages and disadvantages of uh, of those programs versus this. All I do know is that this is a very quick and easy way to see upcoming seasonality. And now with this ability of seeing the individual trades that make up each of the years, I think, it goes even further than it did, rather than just giving you a broad brush, 9 and 1 and 10%, you can actually go and see that data, which is quite powerful. But yeah, those particular software programs were specific to seasonality. Okay, so I'm sure they had a lot more um, to do with all aspects of seasonality. And whereas EdgeRater, it's a more of a general purpose reporting program based on templates, but it has super powerful and fast capabilities for many things, not just seasonality. So if you wanted to get into the nitty gritty of seasonality, I'm sure one of those programs would have been better. But I believe that they're not in existence anymore. Particularly, as Michael says, best choice software doesn't seem to be around, and Seasonality Trader. I'm not the right person to ask about this, but somebody like Jeff Scott would be able to tell you more about the details of that. Okay, all right. So I will move on to this idea of what happens if you run this simulation batch on the entire list of. I'm just pretty much I just run everything now these days on the list of stocks that have liquid options. These are the big, essentially the stocks that, if you want to trade options, that they are reasonably priced and have reasonable bid-ask spreads. So anyway, and it also covers a wide variety of industry groups. So I really like to use this list. So trade simulation batch, I'll run this now on this list, and you'll see it will take a little bit longer, but not too bad. And so here's the result then of running that over the entire list of stocks. It comes up with the way that the batch report works is it's trading each of those stocks uh, for every year. It's not separating them out into individual trades. So it's saying in this list of liquid options, um, let's trade every single one of those in that time frame for each year, and we'll figure out what the average gain is over that period, which is fine. It's not what you want. It's not really what you want, I'm sure, but it's also quite useful because if you had a list of stocks that were related, you could run that and get that summary figure. But there's something else that we can do here. Okay, so we can, to start with, see the average for all of these, uh, and there are several that have a positive average. There's September 2nd to 13th, 2nd to 12th, and 2nd to 16th, and 2nd to 15th. All of the others have a negative average. So those are basically 7, 8, 9, and 10 bars in trades. And there are 2040 trades. So you take that's 10 years of data, so it's 204 trades per year. There's roughly 200 stocks that are being traded every year. However, remember that this has created for us. I can click on any one of these, open the linked document, and you'll see that all of the stocks are traded here for every year. It's not that useful. You could do something like sort this by symbol. And so now you've got your list of 10. Yeah, I mean, it's fine to look at it like this, right? You've got your 10 AA Alcoa stocks. If there are 10 years of data, you've got your 10 American Airlines stocks. You can cycle through that. It's all in this list, and you can sort it, and you can go look at the charts. It's fine to do it like that. But bonus way of working with this is to use our multi-factor analysis and to tag those lists by symbol. And that gives you a much richer set of information. So I'll go ahead and do that. First of all, let's go back to the report viewer there and find out when we ran the trade simulation, it output all of this information into a folder called my trade simulation batch underscore 23. I need to know that because I need to select that from here, batch 23. And then I can choose to either select all of those dates or just one of those dates, depending on what I want to do. Because it might take a little while. Let's just choose one of those. Let's choose one where we know at the top of the list. So we'll choose the 8. We'll choose the September 2 to September 13 report. So I'll go in here, batch 23. September 2 to 13. I'll just select that one. That's just one list, and it's now going to go through that list, separate everything out by symbol, because I've chosen symbol here as my tag layout, and it's going to create statistics based on that. Now I press run, you see at the bottom it's going through reasonably quickly, and now we have the final result for this, which has now separated them all out by the symbol name and giving all the stats for each of the symbols. So yeah, so that's quite a good way of doing that. So on here, for instance, so we've run this for September 2 to 13. Now let's try and find something that has upcoming seasonality from this list. I'll show you how to do that. So I'll ignore this first one because there's 2040. That is the overall all trades. So we'll just ignore that. We'll look for the trades. We'll look for stocks that have at least 10 years worth of data. So we'll just go in here and filter down to stocks that only have 10 years of data. We will then sort this list by number of up years. So I'll click on here. Okay, number of up years, and then average percent return. So first of all, I'll sort by average percent return, and then I'll sort by number of up years. Okay. And so the stocks at the top of this list are GLNG, Golar LNG, Pan W, KSS, Southwest LUV, Eli Lilly, LLY, XOM, Wells Fargo, Johnson Johnson, Insmed. So these are the stocks. And the number of days in this trade are 7.8. So it's not quite your 2 weeks. All right. But so it's not going to give you the same numbers as if you ran the seasonality now and then you looked at the 2-week column. This has actually done something even more detailed. Is it's taken that entire 2-week span and separated it into all of the the number of bars between those 2 weeks, which is obviously 14 days, and then looked at all of those to see what the best period was. And it turns out that September 2 to September 13 was good, the 7.8 days, and Golar LNG is at the top of that list. So we've already looked at Pan W. Let's look at GLNG and look at the details of that. So I just have that row selected. All I have to do is say open the linked document, and that is basically my list now of Golar LNG. You can see it's 8 and 2. There are 8 green ones and 2 red ones. And as I go down through the list, I can see exactly what those trades were. what those years. Each one of those trades is a separate year, going from 2014 all the way to 2023. None of those happen over earnings, by the way. So that's a difference to PANW. And that's information I don't think you get in many places. Even in the other programs that were mentioned, the best choice in the seasonality trader, I'm not sure if they would tell you that that season, that particular period was over earnings. Maybe they would. I don't know. But you do get that information here. Okay, so Dave McMullen has says that he's used and owned all of those, like Seasonality Trader, Best Choice Software, and he prefers EdgeRater because you can combine more templates with it, including expected move. Yeah. Thanks, Dave. Yeah, so Dave is really one of the best users of the seasonality parts of EdgeRater in conjunction with some other templates, and so yeah, we need to I need to talk with Dave and see if we can do something together. Yeah, yeah. I hope Dave's doing well. Good to see you here, Dave. All right. Um, so that basically is my last 2 weeks worth of development is in putting this all together, allowing that detail to be discovered and investigated in the program using some of the features that were already in the program, such as the trade simulation feature. And all it really took was writing a script which detects the last bar before a certain calendar date, the last trading bar before a certain calendar date. The question that you may ask, it's been something that I sort of have been thought about initially when I wrote the original seasonality templates, and the change that I recently made for making it rather than the open of the next day to the close 2 weeks later to being the close of the prior trading bar to the close 2 weeks later. Yeah, you may have some comments on that. Personally, I think that's good because you get to see, the close of the prior day is the interesting thing. When it opens tomorrow, for instance, on Tuesday, you're going to see that move, whatever percentage gain that is or loss it is tomorrow. So I think it's good to use the close of prior bar. Yeah. Okay. So another question: could you please un-NFE? I'm not sure what that means. Could you please un-NFE? So is NFE a stock you would like to look at? Is that what I'm getting here? Let's go back to seasonality now. NFE. Yep, New Fortress Energy. Okay, we've got a symbol there. And NFE. So that has 3%, 3 and 2. So there's only 5 years of data in NFE that we have. For whatever reason, maybe that's a newish stock, or maybe it's changed symbol name. But anyway, we only have 5 years worth of data. All right, so that is a 3%, 3 and 2. Let's go and look at the actual trades. So here's my summary here. Let's go back over to symbol and I'll search for NFE in here. And it's not in here because I sorted it by count. So let's clear that filter. I'll look for NFE again. And here it is. And now I'll open that in the linked document. There are the 5 years. There's the 3 up years and the 2 down years. So here we are. NFE. You had pretty much a flat period there, slightly down. Then you had a 15% gain in 2020 from 9-1 to 911. Then you had a down year, then you had an up year, and a slight up year too. So yeah, I mean, I don't know, because you don't have 10 years of data, it's not as strong a statistic. You only have 5 years, and also you only have three up and two down. So the seasonality there, I don't know that I would, be able to say that that's statistically significant. Okay. So what are we going to be watching next week is the question from this. If this was then a list of stocks that have upcoming seasonality, do we want to put any on a watch list? So we'll go back to our simple view, which is way over here now. Here. Okay. So the simple view, I will sort by average percent up, and I will require there to be at least 8 or 7 up years. Okay, so this is the list essentially of things that could be interesting over the next 2 weeks. My personal thing I'm watching, because I kind of got involved a bit in this last week, is Pan W. So I'll definitely be paying attention to that. In terms of the trend lines with Pan W, if we stick on replay mode, we go back in time. Okay, we'll see what happens. I'll play it from last Monday, the 26th. We had a long upper trend line, very long. And these are automatic trend lines that are of auto length. So it's figuring out the best fit trend line over between 10 and 100 bars. So that was a long trend line there, a shorter, lower trend line. And on Tuesday, it's just basically following the lower trend line. Wednesday, same. Now we have this break, okay, and that seems significant because it's a break away from the lower trend line. You could see that there was, if you put an auto trend line on there that was less than 10 bars minimum length, you would have got a line coming down here. So that was definitely a break above that. So that was interesting on Thursday, and then Friday you had the close here. You're now in the middle of these trend lines. In terms of the straddle performance, which is also really interesting, it has been going up since this level here. Straddles next expiration at the money straddles had been increasing, had been winning on the long side. But in the entire history of Pan W, the number is still negative if you had to add all those together. So it doesn't sort of suggest great performance in straddles, but still, if you're not playing options, it's still worth looking at. And also, I think because it's quite a high price stock, 362 currently, and you're in the middle, pretty much slap in the middle of these trend lines, and with volatility coming back in next week, this and the seasonality, I think that's something to that could actually make money with options too. So I'll be paying attention to that. I don't know about anybody else. Let's take a look at some of the others. So GM, that's been in a very strong up sloping channel. Southwest Airlines, again, a strong upsloping channel, but it looks to be, well, not really weakening. As I go back through history here, you see the lower trend line is not losing its slope. Slope is being maintained, which is good. And you can see the upper trend line here is starting to actually slope a little higher. So that bodes well for LUV. AMC, as everyone knows, is the crazy stock, along with GameStop. Okay, nobody knows why these things move well. it was some internet thing, right? Okay. Avgo, interesting stock. Also, I was paying attention to that last week, but it has, 7 and 3, but only 1%. So we're getting down into lowish numbers over a 2 week period. Maybe not so interesting. So yeah, I'd put these on the list, look at them next week. The other thing that would be really nice to do is to use Dave's seasonality report. So if we look for that, that would be in our hot topics. So Dave McMullen, he's got his seasonality with moving average cross. So this is combining several things. So if I run this, all right, now we're looking at, is there a moving average cross signifying, so it's an 8 and a 20, I believe. And then if that's true, we know we've got some pressure, upward pressure. Is there seasonality along with that as well? And so then we look over onto the right-hand side, which is a duplication, not a duplication, but it's essentially the seasonality report combined with a moving average cross. So it's another way of looking at it. You can first of all look at your moving average crosses and then say, yeah, they're happening. There's a cross here in GME, GameStop. Okay, let's forget about GameStop. INTC, Intel, and this is a great one to be interested in, I think, because it's had such a disastrous time over the last while, and yet it still is a major US company. So this is the kind of stock that, if there was some changing management here and they started doing things, taking advantage of all of the great things that are happening with silicon, and AI and all that sort of thing, they could change things around. So I think this is an interesting one to pay attention to. That did have the moving average cross. It had the seasonality is not great for the next 2 weeks. It's just average. But it has the moving average cross. So like that could be a reason to pay attention to Intel. And then we have the other one is Pfizer, has the moving average cross, and then its seasonality in Pfizer, not great seasonality there. But still, this is a great template for finding things where, it's another way of looking at it. Rather than looking at seasonality first, you can look at moving average crosses first, and then scroll over to look at the seasonality. Okay. So Dave's saying, show the, yep, input 220. Okay. So let's have a look. Change the cross to 220 rather than 820. I think that's what you're saying. Look at 2 and 20. Fast period 2, slow period 20. Okay. Take a look at that. Is that what you're asking me, Dave? Sorry if I'm not getting that. Okay, so yeah, so we have similar crosses. So we have GME, a couple of others like the Bull TSLL, the Pfizer is still in there, Tesla is in here, and JD. All right, so we can filter by 8, 9, and 10 for the next 2 weeks. So if we look at that, we can go, well, we don't have any 8s, but we'll look at the 1 month. Let's see what we've got there. Well, we don't have any 8s. And bearing in mind, I'm using my list of liquid options only, Dave, so might be different to the list you're using. I might not have the stocks that you have in there. But I will sort this by 8s and 7s, basically, and average there. So again, GLNG comes to the top of that list. Does not have any crosses, moving average crosses. But one that does is Tesla. But again, seasonality not great on there. But yeah, there are ways to change parameters and look. And I think Dave's probably looking at a very much larger list than what I'm looking at here. What we really need to do, Dave, is get you on to talk about some of these things. but we might try and do that at some point in the future when you're feeling good. Okay. All right. I think that is about it for today. And thanks for attending. Have a great Labor Day, and we'll see you next time. Take care.